Okay, the next piece that we'll take a look at um, is preparing journal entries for managerial accounting. Okay, and what I want to do is do it using T accounts and then formal journal entries, and talk about it as we go along. Now this is on pages. Let's see, what pages am I on here? Oh, it's not numbered. Are you kidding me? Okay, but it's just before the financial statement part. There's a section in there on T accounts and journal entries, and we're going to hit. But there's a problem at the end. That's it. There's a problem a little ways down here. Hold on one second. Okay, I found it. This is on page 25 in the ProCopy book. Is a nice little problem here. There are a couple of questions up on top, but a nice problem here on manufacturing industry journal entries. Okay, so we've got some assumptions here that we've got. I'm going to put this right up underneath it. That we've got a purchase of raw materials, issuance of raw materials to work in process, direct labor, overhead, goods completed, and goods sold. Okay, so what we'll do first are some T accounts to go along with this, and then we can answer the questions and do journal entries. So for T accounts, I'd like you to, let's see if this is dark enough. Yeah, it's okay, huh? Okay, so first I put mine horizontally like this because the goods go from one to the next, they slide along. So in here they're saying raw materials, so we've got a raw material inventory. So we'll go from there to work in process inventory. And make sure this one is a little bit longer, okay, because you'll have more entries in there. And then finished goods inventory, once it's completed here. Finished goods, and then we'll have cost of goods sold, because once when it leaves finished goods, it's sold, okay, so we'll call this cost of goods sold. Now the one other thing that I add here, I'm not focusing, and the bottom is there we go. One that I add on the bottom is an overhead control account. So I'm going to say manufacturing overhead control. Okay? And if you think about this, what this will have on it, we'll put the actual overhead on this side, the real bills that come in, and then on this side will be the allocated overhead. And it gets allocated right up here to work in process. Okay, so the first thing we've got is the purchase of raw materials. That's going to be $1,000. That will increase raw materials inventory, so it would be a debit. Okay. The next one is the issuance of raw materials to work in process, and that's $750. So $750 comes out, and I'm going to put I'm going to say DM for direct materials here. Okay, $750 comes into work in process. Then direct labor for the month is $2,000. So direct labor is going to be $2,000. And overhead is $3,000. So it would actually come out of here and it would go in here. $3,000. Now, a couple of things. On this, for these T accounts, you want to always leave some extra room for work in process inventory, and it's always going to be direct material, direct labor, manufacturing overhead. Okay, so don't change the order of this. Don't make it different. There's no room for any creativity. Okay, I want you to do this just like it is here, and that way, if you've got missing information or anything like that, you'll be able to see it right away. Now it's blurry again. It's just a smart thing to do. Okay, to do it this way. So raw material to work in process. The next thing they tell us, and we've got all our three parts here in work in process inventory. Goods completed are 4,500. So I've got a total debits here. Total debits here of 5,750. And 4,500 is completed. And I would ask you, tell me what that 4,500 is. What does that represent? Do you remember what that's called? this would be your cost of goods manufactured, okay? And what's nice about a well-done work in process inventory T account is that the entire cost of goods manufactured will come, or cost of goods manufactured will come off this schedule, okay? Everything that you need. So this is perfect, you know? And so what do we have left then for a balance? I also want to show you this. There are a lot of reasons to do this to T accounts, especially if you're looking for money, okay? This would be $12.50. Or looking for an entry, okay? If you've got some blanks in there, to have a subtotal piece like this is good. This one, the raw material inventory, is easy to see. We know that would have a balance of $250. So the $4,500 that comes out goes into finished goods inventory. Okay? And then from here, we sell, cost of goods sold is $4,000. So $4,000 then comes out and goes into cost of goods sold. Okay? So I'm left in finished goods inventory. I've got $500 left, $12.50 in work in process, $2.50 in raw material inventory. Okay? The other thing too is one other thing I was going to show. Oh, that this number, this right here, the total of the beginning balance plus whatever cost of goods manufactured that is goods available for sale. Okay, now we're going to do this, you know, a lot in other chapters, so don't get all hung up on it. All you're trying to do is just get accustomed again to thinking about cost and actually managerial accounting. Okay, so don't worry about this. There's a lot more coming. So that's goods available for sale. This is cost of goods sold. Okay, finished goods inventory T account has quite a bit in it. Now let's do journal entries for it. So the first journal entry we would have, I'm going to slide this up. I'll put them over here. First journal entry is the purchase of raw material inventory. So for A, I would debit raw material inventory for $1,000. And you can credit cash or you could just credit accounts payable. But the one thing I do care about is the format that you're using for your journal entries, okay? These should be debits to the left and credits to the right. There should be a definite indentation there, and your numbers should also reflect that. Debits are first and then credits. All right, because we do things in standardized ways so that people can follow what we do. You want to do it the exact same way that someone expects to see. Okay? And for the next one is going to be work in process. Goods come out of raw material inventory and move into work in process. So I'm going to increase work in process inventory and decrease raw material inventory. And that was for $750. Okay. Then we pay salaries. For C, we've got wage expense. So we're going to have a debit to work in process. And I would put a little DL there for direct labor. That's this right here for $2,000. And then you can credit salaries payable if you wanted, something like that. You could credit cash, you know, with one of those accounts that would work with it. And on D, we've got overhead for $3,000. So this would be when you would take it out of the control account. That goes to zero at the end of the year, and debit work in process. Okay, for $3,000. Okay, and we're almost there. The next one is the $4,500 of goods that were completed. What we'll do here is decrease work in process inventory and increase finished goods inventory for $4,500. Okay, and then the last one we have here is cost of goods sold, and again that would come out of finished goods and go into, I'm just going to make it cost of goods sold. All right? For $4,000. All right, so that's just a warm up just to get you back into the flow of numbers through accounts. And seriously, we'll be doing a lot of these, so don't get worried about it. Okay, don't feel like you've got to be, totally on top of this. Well, we'll do quite a bit more, but at least it gets it back into your head. And we'll work on overhead then quite a bit. All right, I do want you to be real solid though on debits and credits, and if you need more work here, it's worth it to put in the time so that you are just nothing can touch you on debits and credits. Okay, that's your goal. Okay,